Thank you, David, and thank you, Prakash, for your kind introduction. In principle, you have already summarized everything which is so to say important to say, but if you allow, first of all, good morning to everybody, and thank you to OMFIF and all the others for organizing this event. Indeed, I think we tried it several times, but it was not possible in the past, so it's good that finally it was and it is possible, and thank you for your interest. Because I think it's very timely to be here and to discuss what Europe is doing and will do in the near future in order really to address global challenges, because our understanding is not only to take care about Europe, but also to take care as much as possible, and we feel our obligation to participate, to contribute, and if necessary to spearhead on issues which are of global relevance. And climate change, climate transition is probably the most urgent one. Of course, we are affected by crisis, by wars, etc. But finally, I think we have to see the long-term perspective. We have to see what are the top priorities, and of course, we have to pursue this. But important is to understand all this can only be achieved if Asia and Europe are working together. Why? Because Asia and Europe stand for 68% of the global trade, 65% of the global GDP, and also, not unimportant, 75% of global tourism. These extraordinarily strong ties between our regions are even more important today as we are facing, as I said already, common challenges. The aftermath of the pandemic, I hope it's the aftermath, and we are finally quasi at the end of the tunnel. Of course, the climate change, and it was rightly said by David, that the Russian war is not only a regional event, it's something with global consequences. And of course, we have the whole energy issue, global food security, and in general, global stability issues. The best antidote to this potentially looming mix is simply joining forces. Therefore, I'm delighted indeed to be here and to be together with you. And once again, I thank OMFIF for organizing this event. Because this event brings two regions again closer together, offering a platform, and I hope it can be used, and I'm sure it will be, to exchange and discuss experiences and potential joint ways forward. An important part of the European response to the current challenge is NextGenEU. The Union's temporary recovery instrument is a win-win solution for Europe, international investors, and the global capital market as such. The starting point is the idea that Europe needs to stand up to the pandemic challenge like an investor should manage a crisis. Each crisis in the long run also offers opportunities. I think this should be the common understanding. It is at least our understanding and our approach. We see this crisis as an opportunity to invest in the green and digital transition, making Europe more resilient and even more fit for the future. Therefore, we use the common power of 27 member states to launch a forward-looking stimulus package of more than 2 trillion euro, existing of our common long-term budget, boosted by NGO's 800 million euro firepower. Maybe it's important to recall the European Union, we are so to say working on the basis of a multi-annual financial framework, which means a budget for 7 years. The current period lasts from 2021 to 2027, of course, broken down by annual budget, but it's something which is, I think, rather unique in the world, that a democratic structure is able to have a multi-annual financial framework, giving a lot of reassurance and predictability also for the private sector, where are the political priorities, where we are heading. And I think this stimulus package, which we have put together in 2020, has already paid off. While it took 8 years to recover from the previous financial crisis, the EU economy was rebounding already last year from the pandemic recession faster than expected. Already in the third quarter last year, we were actually at the figures of the end of 2019. It allowed us not only to respond at an unprecedented speed to the COVID crisis, but it also helps us now facing the war against Ukraine, to help Ukraine to support the neighborhood, to work on becoming independent of Russian oil and gas, and to boost our economy and to stabilize the global food and security conditions. Next Generation EU is a promise to the future, thereby fulfilling standards which Warren Buffett once defined as, I quote, "Investing is laying out money now to get more money back in the future." I'm sure many, if not all of you, are rather familiar with this quote. So I would like to use this opportunity to illustrate why Next Generation EU is an attractive investment for you. First of all, it's sound and solid. Second, in addition, it's innovative and future-oriented, offering new opportunities in sustainable finance. And third, as a result, it strengthens markets and our common economic future. Our bonds have an excellent rating because they are as safe as bond can be. The Union's debt service is ensured via multiple layers of protection. In addition to this strong credit, based on the EU budget and the strengths of our member states, the structural setup of the Recovery and Resilience Facility delivers credibility, which is key for us. The European Commission, together with the member states, defined recovery and resilience plans with concrete targets to ensure every euro is invested in line with our goals. Only fulfillment of agreed milestones will unlock payment. Only to understand, we have agreed with each member state a very comprehensive reform plan, not only based on investments, but also based on necessary reforms, where we refer to the European semester recommendations, and member states only received a 13% advance payment. The remaining 87% are only dispersed in installments if certain milestone targets, which are pre-agreed, are fulfilled, audited, and so to say confirmed, and then, of course, the disbursement takes place. This ensures that wise investment means wise spending, because Next Generation EU strengthens the Union's green and digital transition. We are thus sowing the seeds today so we can harvest growth, jobs and prosperity tomorrow. Almost 40% of NGOs spending fuels climate measures, and this investment will pay manifold returns. I have to say, we have given our member states a precondition to program at least 37% of the allocation for green transition, and all of them have easily adapted not only to it, but proposed more than this minimum threshold. Some of them, like the country I know best, or Germany, they are almost at 60% of their allocation for green investments. And this Green Deal serves as Europe's growth strategy. Meeting the 2030 climate and energy targets can add already 1% of GDP and create almost 1 million new jobs in Europe. This strengthens Europe's role as an avant-garde for new green technologies and thus offers further opportunities for investors from Asia and direct cooperation. At the same time, it contributes to policy goals which are globally important. I said it already in my first sentences, in particular in Asia, where many countries already feel the impact of climate change. As a result, our bonds are a real investment in the future. They offer a unique combination of solidity and diversification, which is highly needed in times of geopolitical stress and uncertainties. Solidity and diversification is also reflected in our issuance program. Our solid bonds allow us to stay on track. Since we started our funding operation a year ago, the Commission has issued 129 billion euro in long-term funding in different maturities from 3 to 30 years. We are also offering short-term investment opportunities with our short-term issuance program of EU bills. This is proof of our now established presence in the market as a highly rated issuer. Our credibility is underlined by transparency. Therefore, we remain to be committed to transparent and regular communication about our funding plans and needs. End of June, we published our third semi-annual funding plan with our schedule until the end of the year. Based on the latest forecasts, the Commission intends to issue 50 billion euro of long-term EU bonds between July and December this year, to be topped up by short-term EU bills. This funding plan is rather precise because it's simply based on the expected disbursements for member states on the basis of what we have agreed, what we can expect, of course, under the assumption that the milestones are fulfilled. Of course, if they are partially fulfilled, this will lead to less disbursements, but in general, this is the experience from at least the first half year when we were dealing with the assessment of first milestones. Things are going into the right direction, and we can rather rely on the timetables we have agreed with member states. I quote, I think David was already referring in a different context, but I think it was a headline in the Financial Times recently when it was said, "Green bonds are gold dust for investors." I think this title proves that the European Commission is an avant-garde in a market with a growing investors' appetite. Our goal is to turn green bonds from gold dust into green gold for investors and, of course, for Europe itself. Already the first transaction in October 2021 was the largest green bond transaction to date, in which the Union issued 12 billion euro in green bonds, while being 11 times oversubscribed. So far, the European Commission has raised 28 billion euro in green bonds, and we are on course to reach our ambition to raise up to 30% of NextGenEU funds through green bonds. That means up to 250 billion euro. This will make the Union the largest issuer of green bonds worldwide. Why is this attractive to investors? Our green bonds are much more than just another bond. They give investors the opportunity to be part of their solution, tackling the challenges of our generation and contributing to future growth and stability while having a stable return. Investing in our green bonds means also investing in a well-developed market for sustainable finance. Europe started early to look at sustainable finance. Already in 2007, so 15 years ago, the European Investment Bank issued the first, at that time not yet called green bond, but climate awareness bond. In the meantime, 16 EU countries are issuing green bonds. More will, others will follow. And in March 2022, 46% of the outstanding green bonds were in euro, and 52% of the outstanding green bonds were issued by European issuer. With up to 250 billion euro, again, the green bonds issued for NextGenEU will further develop this market. By bringing such a sizable green safe asset to the market, the Commission provides access to the green bond market to a wide range of investors, allows investors to diversify their portfolios of green investments with a highly rated liquid asset, thereby supporting a virtuous circle of sustainable investments, and serves, of course, as an inspiration to other issuers. Becoming the largest green bond issuer worldwide gives us, of course, a special responsibility. Green bonds are, more than others, a matter of trust. Therefore, the Commission is issuing green bonds in line with best market practices, fulfilling the well-established International Capital Market Association green bond principles. In addition, we offer investors full transparency. In March 2022, we launched our NGU Green Bond Dashboard as an interactive tool, giving investors the possibility to dig into details, getting information in nearly real time on all projects funded by green bonds. This is unique. Currently, we update this dashboard weekly, and towards the end of the year, it should be indeed being updated on a daily basis. So investors can see how much money is used, for example, for a green hydrogen program in Germany, a green research and development project in Denmark, sustainable mobility in Italy, or the construction of wind power plants in Lithuania. All of this adds more value for investors and will draw, hopefully, even more capital flows to green finance. In that respect, I think indeed it's not overdoing when one can say Europe is setting global standards, in particular in terms of transparency, communication, information concerning the use of green bonds and the investment in green transition. So while we want to develop Europe's leading role in the fast-growing market for sustainable finance, we also want to inspire others to catch up, because the urgency to act and fight climate change becomes more and more obvious. Many countries also, of course, in this region are increasingly struggling with a rising sea level and increasing mean temperatures, causing water and food supply challenges. In this context, green bonds could contribute to addressing the global financing gap. Team Europe is therefore preparing a global green bond initiative. Team Europe means all parts of the European Commission dealing with external relations. So we have different departments, we call it general directorates, and all these are working together since the von der Leyen Commission came into office under the, so to say, brand of Team Europe. And this flagship initiative, meaning the Green Bond Initiative, is part of the so-called Global Gateway Investment Package. The objective is to support the expansion of the green bond markets in partner countries, thus helping them mobilize capital from institutional investors to finance through green bonds their climate and environmental projects. The Commission has taken a leading role to initiate and shape the initiative as an opportunity for the planet, but also for investors. I was traveling to present NextGenEU also at the beginning of the year to the Arab Peninsula to meet partners, interlocutors in the Gulf region. And also in this region, there is a growing awareness, there is an interest to issue green bonds because they are anticipating developments of the future. And it's therefore not by chance that Egypt this year and the Emirates next year are hosting the next COP27-28 meetings. And this is also a proof that this issue, so to say, green transition, fight against climate change, becomes a global issue. And all of us have committed to the Paris Accord. And I am reassured in all my meetings that it's not only about agreeing about something, because now the focus has to be on implementing and implementing again. And this is why, of course, we have now to focus where and how money should be spent indeed to reach our goals. But of course, it was already mentioned by the previous speakers, we are currently globally, but in particular in Europe, affected by the war against Ukraine. Also, OMFIF has recently presented a paper where it renewed the question of how sustainable and safe invested capital is in countries with autocratic governments. For me, the answer is obvious, because irrespective of moral reasons, sustainability and stability, and thus our democratic values, are valuable. In the context of increasingly volatile markets, NextGenEU becomes even more important. Its scale and underlying fundamentals of NGO mean that NextGenEU is not just financing Europe's resilience, but it is also providing an invigorating pillar for the capital markets. EU bonds are an opportunity to diversify risks. They represent an additional highly rated, liquid and positive yielding investment opportunity with similar characteristics to other safe assets and attractive relative return. NGO bonds are increasing the pool of safe euro-denominated assets. In 2021, EU bonds accounted for almost 13% of the total double and triple A euro-denominated issuances, more than 3 times than of 2020, the year before. In addition, with the onset of the EU bills program, now the EU credit can also be bought in the money market. NGO investments have attracted to date more than 1,000 investors from 70 different countries. Given the scale of issuance required to fund the program, the EU has moved from a small supranational issuer to a large sovereign-sized issuer, placing it straight after France, Germany, Italy and Spain, the big European issuers. As a consequence, NextGenEU will give more options for portfolio risk management, benefiting all investors, and as a side effect, boosting the international role of the euro and even a better understanding of the European Union as a supranational political entity. These benefits are not NGO's primary objective, but remain significant consequences of the increased EU presence in international debt capital markets. So, relying on unity, we will even turn headwinds to our advantage. It was said, quoting Jean Monnet, and this has proven its truth over the years. The Union always grows in the course of crisis, in the reaction to crisis, and in that respect, I think we have a track record on which you can rely. It's not that we are looking for crisis, but once we are confronted with it, we manage to weather it, and therefore the Union has proven times and again that it is a learning union, including the politicians just being in office at the time of this or that crisis. Therefore, funding Europe's economic transition is an excellent return on investment. It pays off for all of us, and the Union is prepared to work hand in hand with you to counter global uncertainty. The EU member states, as well as Asian countries, are committed to a rule-based order, and Russia's war against Ukraine only reaffirmed our position. And it's not by chance that we are here in Singapore, which is one of the leading hub in the region if it comes to promote, to defend, to support multilateralism as we, the Europeans, do it. In this, we are united. Here we should join forces, and therefore cooperation is key to improve our economic prospects in the European Union, but also in Asia, to tackle the higher energy and commodity prices and the high inflation. So the best we can do to counter the current uncertainty is to work together and to invest in a common future. And I know this is also the topic of today, and I hope you have a lot of interesting, inspiring discussions officially here at the panel, but also during the breaks, networking. All this is something we have missed during many, many months, and it was also said video conferences, etc., cannot replace the opportunities to see each other, to talk to each other, to get inspired, to have an exchange, and to build trustful and reliable relations. So thank you very much for your interest, and all the best, and I hope I could make some appetite on Eurobonds, but there will be other opportunities during the day, looking to our General Director Gerd-Jan Koppmann and others who will present our products and our opportunities and perspectives during the course of the day. Thank you very much.